All right, good morning, ladies and gentlemen. I'm running a little bit late today, but I managed to get the show started right on time. If you're on the show page, you'll have to hit F5 to refresh the page, but no worries. So today is June 14th, 2023, and it is Fed announcement day, and the Fed is expected to pause rate hikes, right? Which seems kind of unusual. So the expectations are that they're going to pause rate hikes today in June, and I guess wait and see what happens, and then they're expected to hike again in July. So it seems kind of silly, but I suppose that their thinking is that if inflation continues to come down, and of course, I mean, 1 month, if you any given inflation report, right? So like the CPI was released yesterday and was 4% year over year. 4% inflation, which by the way is double what they're shooting for, their 2% inflation goal. But anyway, you dig into the numbers and then it gets very confusing. What is the actual inflation rate? And of course, we all know that even when inflation slows down, that was the big headline yesterday, right? The rate of inflation is at a 2-year low. It's been coming down. And but the price of everything still stays elevated, right? If the inflation rate was zero, that doesn't mean that they're lowering prices anywhere. So I suppose the price of some stuff comes down, but there's the big debate, or the big thing to think about when it comes to inflation is the fact that they've been emptying the strategic petroleum reserve, right? Kind of holding the price of oil down. And so to me, like I've always thought, and I'm not an economist, but I've always thought that the price of oil, the price of gas, is like probably the number one contributor, or has the most effect on inflation other than anything else, because goods need to be moved around. And so anyway, price of gas is, well, last time I looked, which they'll show it on CNBC again in a second, but it was hovering right just below 70, which is down considerably. But then again, it's all about that strategic petroleum reserve. Right. So anyway, lots going on. Inflation, 4% year over year, and then of course, when you start measuring year over year, then you got to look back and see, what was going on 1 year ago. So there's a lot of moving parts as usual, but let's talk about something. The S&P's been on a tear here, right? We had this little consolidation here above the 50-day, and I think when I was on last week, I talked about 50-day moving average. So here, here's the all-time high. Let me zoom back a little bit. There's your all-time high. Notice that I have, the reason I wasn't zoomed back all the way is notice I have the RSI on this chart. So let's just take a look at the good old RSI indicator. And you know what they say, the market can stay overbought longer than you can stay solvent, right? But here's the thing is, well, the RSI on the S&P here, prior to like the market top back at the beginning of 22, there was a huge run up in that RSI. Man, look at that thing. It looked like it went to about, the high 70s. Then you had another spot here last summer where the RSI poked over 70 for a brief period of time, and look at what the market did, right? That was interesting. I remember that. I remember talking about how the market rallied up and literally touched the 200-day moving average like to the tick practically, and then sold back down and made a lower low, which was kind of interesting. Anyway, this is something to consider at this point if you're thinking about chasing this rally. is that the RSI is like 72 right now. And so that doesn't mean that, it can't keep going up and get overbought. So, like I said, but anyway, it's something to consider. Typically buying when the RSI is over 70 is not the best idea medium term as far as deploying capital, right? So, zoom in here. There was something else. Some other overbought reading, and I forget what it was that I saw recently. You got to admit, everybody's got to admit that, this long sort of sideways consolidation from April, all of April and all of May was a pretty decent consolidation, and you can look and see, the market came down a few times, tested the 50-day moving average, and then come June. And of course, a lot of this has to do with the mega cap stocks. But anyway, keep an eye on that RSI there. I'm going to pull this chart back down to where it belongs. Let's see if I can fix my chart now, because I usually like to have the big chart up just so that, there we go. Makes it easier to see. So here we are, let's go back to this big sort of cup pattern. Yeah, I've mentioned a few times that if this was a stock, it'd be a pretty constructive looking chart because you got this big gigantic cupping looking pattern. In the very near term, it's getting a little stretched to the upside, right? Speaking of stretch to the upside, we looked at this last week. This run on Apple, just incredible, right? And, this was a new all-time high here recently. And, this is a very big contributing factor. It's interesting how right at the beginning of 2023, I guess I would assume that the big institutions had tons of capital to deploy. And of course, when money goes into index funds, the first stock it goes into is Apple, right? Most widely held, largest market cap stock on the planet. And so, there's a lot of passive money that just flows into the market. And the very first stock that it gets deployed in is Apple. And so back here, this is kind of interesting. I'm pretty sure this was the day that Apple announced their new goggles that they're coming out with at $3,500 a set. It's going to be interesting to see how that pans out. I mean, people were joking about it, and parts of it looked kind of cool. The whole augmented reality and all that. It's going to be interesting to see how widely adopted that is. Personally, they look kind of cool, but $3,500, they're not that cool. And the other thing is that they do look like they're going to be kind of uncomfortable. But hey, who knows? I initially thought that I remember when they came out with the iPad and the iPad Mini. The iPad Mini was a lot of people thought that was going to be a bomb, but personally, I like that idea because the first thing that came to my mind is that the iPad Mini a woman could put it in her purse real easily, as opposed to like the, first and second generation, those big giant clunky iPads. But anyway, and then when they came out with the watch, the first thing I thought of is that the screen's so small that who in the world would want, a computer watch, but they are actually pretty cool. Personally, I have a Fitbit, but my mom's got an Apple Watch, and they're kind of cool. And so generally when they come out with something new like that, the first thing everybody likes to do is sort of joke about it, and you never know. So it's going to be interesting to see. Of course, plenty of these other things, Google Glass, and I think Facebook, Meta. They had they bought the Oculus and all that, but anyway, it's going to be interesting to see how that works out. But back to my main point here is that, Microsoft, Apple, Tesla, I mean, look at Microsoft here. The market cap increases on these stocks are just insane too. Look at this. I happen to have, I didn't realize this, but I have one of my chart setups that I have the earnings labels on, which is nice to know. And so look at how Microsoft popped on that last earnings release and just trended up since then. So um, Netflix has been on this huge tear lately. So these mega cap tech stocks, they're holding up the market for now. Look at Meta here, right? Remember when this thing was going down and then it just bombed out on earnings, and then once it turned around, it hasn't stopped. Look at that. That's just an incredible chart right there. So anyway, let's see what as long as we're looking at all the mega cap tech stocks. So there you go. Big pop on Google when it broke out. Interestingly enough, Google looks kind of like the market where, it rallied back up to the prior peak and traded sideways for a long time and then broke out. So here's something interesting though, is the Russell 2000 all of a sudden, and I'm not sure what to attribute this to, but it could be, well, it could be any number of things, but the Russell 2000's always been sort of the red-headed stepchild. And we looked at this, last time we looked at it, last time we looked at it, I talked about how it was still, closer to the bear market lows than it was its high, but it's a little bit of rotation. Rotation's one of those words that you hear a lot of lately. And so, money's been rotating into some of these small caps here and bidding up the Russell. And so you wonder where it's coming from. So anyhow, sorry about the pause there. Had to say goodbye to someone that's leaving. Anyway, so, Russell 2000 picking up. So the question is the rally broadening out? Is it rotating? What is going to happen when the Fed announces that they're pausing rates? Let's see what this, just for the fun of it, I wanted to take a look at the old banking sector. So it looks like, they basically, I guess this was the banking crisis here, right? The banking crisis where, when was that? That was in March. And so, banking crisis, all this kind of stuff. Then there was another leg down and they've bid it back up to kind of like where it was, and be interesting to see what happens from here, obviously. Geez, a chart like this, it kind of looks like if it can break over 45 here, looks like you could get another pop back up back up towards 50. So that's something to keep an eye on. Personally, I don't follow the sector enough to know whether, of course, anymore, like, do the fundamentals even matter anymore? Look at the Qs. So this is just absolutely amazing, right? Thing about the Qs here, let's see. What I wanted to do was put here we go. I guess I should pop this out. It makes it a lot easier to work with. All right, does my chart still look good? Yeah, pretty much so. Let me squeeze it over just a little bit there. There we go. Sometimes when you manipulate stuff on the screen, like when I popped out this little drawing tool here, I didn't want to skew everything. All right, so anyway, what I was attempting to do here was to draw like this humongous resistance level. And so the funny thing is, on the S&P, well, let's go back to the S&P here and see if we have like a similar resistance level coming up. So let's see. For the S&P, there was this resistance level which it broke over, and that was probably, that probably triggered a bunch of short covering if I had to guess. So you gotta wonder, how much of this is short covering, right? Oh, and the other thing is that like right about this level here is where they started talking about a new bull market, right? The cover of Barron's, new bull market. So, once the market rallies 20% off of the lows, then it's a new bull market, which is kind of funny because to me, um, I mean, suppose the market lost half its value and then bounced up 20%. Is it really a new bull market? Like back in back in the Great Depression, the market lost like 85% of its value or something from the high. It was down like 85%. And so, when it bounced 20%, is that a new bull market? It's debatable. Well, it's just like down 19% is a correction, and down 20% is a bear market. So it's all semantics. But anyway, so like around this level here is what the Nasdaq or what the Qs are flirting with, I should say. The Nasdaq and the Qs are a little bit different. So I usually just look at the Qs. Yeah, it's going to be interesting to see, with the market so overbought here. But look at that 50-day moving average. Hang on just a sec. Sorry about that little pause there. I had to, that was an important call that I had to take. So anyway, now I've lost my train of thought. But anyway, today's Fed day. The market's overbought. The Fed's going to pause. S&P's on a tear here. There's a lot of resistance overhead, but we managed to break through like the major resistance. So it seems like everyone's kind of bullish here. So it seems like the sentiment's a little frothy again. Goldman Sachs just raised their year-end price target to 4,500, right? And the crazy thing is, like, I remember back here, it was somewhere back here. The S&P was right around 3,600, and it was probably like late 2022. The S&P was right around 3,600, and Goldman Sachs lowered their year-end price target to 3,600. I remember that distinctly. And then, of course, obviously 2022 was a terrible year for the market. So um, it's just interesting, that the sentiment has picked up. The cover of Barron says it's a new bull market. This um, seems like the animal spirits are back. The Fed's going to pause. So the funny thing is the last bunch of Fed days, the market reversed and tanked. So, are they going to pause and then Powell's all hawkish? I mean, it's just kind of funny because the market sort of expects. I think the market expects, or not the market, the sentiment sort of expects the market to reverse today. So it's going to be interesting to see. Maybe the shorts continue to get squeezed for a little bit, then we get a pullback. But at some point in here, this market's going to pull back. I guess once the last short has finally thrown in the towel and covered, right? So the old saying, the market can stay irrational. The other thing we haven't talked about is valuations, but as everybody knows, valuations are extremely stretched on a lot of these stocks. So man, there's a lot going on. But anyway, I got to run and take care of something. That's what that phone call is all about. So we'll see what Powell has to say, and that'll probably be the most important thing. So what they probably ought to do, in my opinion, what they should do is, instead of pausing, is raise another quarter point and then say, okay, we're done for now as long as inflation keeps coming back down. So we'll just have to see. But anyway, thanks for tuning in. I'll see you.